It is Taco Tuesday, April 7th, 2026. And man, I should have doubled my margin at the start of the market because I mean Apple was down 5% at one point and then it just completely reversed. In my personal account, it was almost down 5%. It probably was at one point, but Robinhood just doesn't show the exact bottoms on their line charts for some reason. But we'll just say 4.5%, 5%. I was down at the start, and then it swung up 6.84% in the green today. So let's see approximately how much would that have been. So that's basically 12%. Yeah, basically a 12% swing for me, more than a 12% swing in one day. Even though this was something that a lot of people did predict. They said it was going to be Taco Tuesday. It was on X. It was trending at one point, I think. And I guess I should have listened to him. I should have doubled my margin and just went all in. But it is what it is. At least we're not red today. But I am still down a lot from my all-time highs. I'm at 161K. My all-time highs was about 305K, a little bit over that. But for the week now, I am up 6.22%. For the month, I am down 5.9%. 3 months, I am down 32.62%. Year to date, I am down 32%. Year over year, I am now up 134%. And of course, all time 346%. Lots of top movers today. Surprisingly, Axon did not move at all off of this news, but Robinhood was up big, Circle was up big, of course, crypto was up big, the usual suspects. Software was also up big. If we take a look down here, my options are still just kind of hovering around. Of course, crypto, they're all up over 5-6%, except for XRP. And it does seem like a hype is starting to trade more alongside Ethereum and Solana rather than just kind of diverging and trading alongside oil. Because, I think the market has pretty much gotten their head around the fact that it doesn't really matter if oil goes up a lot or down a lot. Like, hype is just going to benefit off of the trading activity, which was one of the things that kind of confused me. Like when oil was up big, hype would be up big and crypto would be down. But now it's starting to kind of trade alongside each other, right? Which makes more sense. There's a lot of catalysts for crypto. Robinhood Chain, I believe, is with Ethereum. SoFi, I believe they partnered with Solana. So, there's a lot of good news surrounding crypto, but it's all getting buried with this recent, fear, FUD that has happened in the Middle East, the conflict. And of course, hype. It has been the outperformer, and that's because it's offered 24/7 commodity trading during a time where that was very valuable, especially during a time when a lot of news gets announced over the weekend strategically because politicians obviously don't want to crash global markets, so they just announce stuff over the weekend. And when you go through time periods like that, a 24/7 exchange like hype is going to be very valuable. So, crypto in general is just booming. Well, if you look at the year-to-date chart, it's not booming, but it should boom once it gets through this winter period, and then everybody will start talking about what we've already been talking about, which is like SoFi partnering with Solana and more banks partnering or getting into blockchain and crypto. And of course, Ethereum with the Robinhood chain, and all of these catalysts are going to start entering the news cycle, and then we'll enter that new hype cycle again for crypto, even though none of that news is really going to be news. It's just the time period is going to be more euphoric, but it is what it is. When it comes to my swing positions, I did go ahead and close Reddit a little bit too early. Reddit's the one that I've been playing around with, just one share at a time. It would go down big, and then I would buy it just 1 or 2 shares at a time, and then it would be up big like the next day or next week, and then I would just sell, keep that profit and then just throw it into my secondary account. So I am getting very close to one full share of Reddit just doing that, which is kind of funny. But IGV software ETF is up over 3% today. Very nice. I should have bought more, but it is what it is. Axon is actually down over 6%, which is shocking. And Axon, I actually did buy a little bit more because I think this disconnect is going to flip. I don't know when, but Axon right now is trading like it's like a super hardware based company, like it's going to get replaced by AI or something. I don't know what the fear is surrounding Axon, to be honest, but I think they will benefit during this time period. They are switching to more of a SaaS like, software subscription model company. They have their own AI. I don't know if it's like rolling out or if it's already released. I'm not sure yet. But they are investing heavily into software and AI, and they're gradually changing their business model. So I think over time, similar to how hype used to kind of diverge from crypto, but now it's trading alongside it, I think something similar could happen with Axon, where it'll start to trade alongside IGV a little bit more as it becomes more of a software service type of stock rather than just selling hardware like cameras and equipment, right? But Melee is also up 4.88%. Microsoft is up, of course, because it trades alongside IGV. Apple was down 5% at one point due to, I want to say, the foldable iPhone. I mean, that's just the news excuse. Obviously, stocks will do whatever they want to do, and then the news will just justify it. But whatever the reason is, it was down 5% at one point, but now it's just break even, slightly green. So I guess I should have bought a whole bunch of Apple at the open. Now, of course, Robinhood is up 6.61%. Nike was down a lot more earlier today, 3.5%, but now it's almost regained its losses, still down just a little bit. But Pepsi is also getting sold off a little bit. Obviously, if you're entering a risk on day, a lot of risk off and more quote unquote safe, stable stocks are going to get sold off just a little bit. REPX, even though it did start to sell off a little bit towards the end there, especially when that ceasefire announcement happened, it's still up 5.5%. So I'm not a military expert or guru or anything like that, but if you were to ask me for my opinion about this whole 2-week pause thing, I'm not really going to get my hopes up. I hope this is the end because, like I said, I hope our portfolios can catch a little bit of a break here after the beating that we took all year, basically. But if you look at the long-term charts for a lot of these oil companies, it really does seem like they're entering a new bull cycle, a new bull market, which is good for shareholders of these various tickers, but that's kind of scary as just a normal civilian, right? You're going to be paying more for gas. That possibly means more global conflict and more, or even if there's no conflict like warfare, there's still going to be a lot more like trade tensions, right? And obviously the market doesn't like that. So just to show you guys what I am referring to when I say, if you look at these long-term charts, if you just look at the 3-month chart for RAPX, I mean, look at this. This stock has been all over the place for many, many years, and it has been either just gone nowhere or consolidating for many, many years under all the moving averages. But recently, I mean, it first crossed over here in 2020, right? And we can all guess what that was. But then it entered this new accumulation period here, and now it looks like these moving averages are crossing over again, which is kind of scary because that means possibly $100 a share for RAPX, which most likely means gas prices are still going to go up, unfortunately. So, I mean, gas where I'm at, it's ridiculous. It's probably $4 a gallon right now. Well, gas is down because of the ceasefire announcement, so I'm not sure where it's going to shake out tomorrow, but it is almost $4 a gallon, and RPX is $40 a share. So if it hits 100, I mean, that's like what, maybe $10 a gallon for gas. I don't know if it'll actually hit 10. It'll probably cap out at like 7 or 8, something like that. But yeah, it's looking a little bit scary here. Well, good for me because I'm a shareholder of RPX. But if we take a look at some other sectors, for example, the Brazil ETF from iShares. Now, Brazil, their ETF and their market in general is heavily commodities based. Obviously, we have some outliers here in Latin America, like Meli, which is a fintech, and you have Nubank, that's also a fintech. So obviously, there are some outliers, but for the most part, if you look at the Brazil ETF or Latin American stocks, the biggest companies are commodities based, right? Like Petro Brazil, I think it's called Vale or VALE. I'm not sure how to pronounce it. If any of you guys speak Portuguese, tell me how to pronounce it. But yeah, I mean, if you look at the long term charts, same thing with a lot of these oil companies. Moving averages are crossing over, and it looks like it's starting to break out. Keep in mind, Stanley Druckenmiller, I think, is long EWZ, and he is like one of the greatest investors of all time. He used to work for Soros, and he helped Soros like outperform the market. Or maybe he was solely responsible. I don't know. But yeah, I mean, it's starting to come up here to this 200 monthly. So that's going to be big resistance. But if it breaks that 200 monthly, that's a little bit scary. Now, that's good news for Latin America, or at least the shareholders of Latin American companies. But like I said, as a consumer, as a customer, right, you're going to be paying higher prices possibly for commodities and oil. Even some other tickers like the solar ETF, right? Even though this is not like commodities or oils based, this is a completely different type of energy, solar. Even these moving averages here are looking like it's starting to cross over. So that could possibly mean higher energy prices in the future. Like I said, that's scary, but if you're a shareholder of this, it might not be scary for you. But like TAN, the solar ETF just broke the 200 weekly, and it looks like it wants to consolidate and use it as support. So, TAN is another ETF that I'm looking at. I was never really big on ETFs, but with all of the things that have been going on recently, there's so many different sectors that are either beaten down or looking like they're wanting to break out. Like I said, a lot of energy companies, a lot of Latin American companies, solar, just these different sectors look like they're trying to break out, or they're breaking many years of resistance, and it looks like it wants to enter a new cycle, right? Like TAN, it's possible for TAN to double to 100, right? So like I said, it's scary, but I'm based on what I'm seeing on these ETFs, it's won me over as a shareholder. I'll just say that because I just want to buy everything, but I can't. Obviously, I just don't have enough funds, and my money is spread around with a lot of different companies. My main account is very concentrated, of course, but my other accounts, like my secondary one and my other various brokerages, I have too many stocks splitting up my money. So, and there's too many sectors that I want to buy. So instead of doing a whole bunch of research into each sector and then trying to guess which company is going to be the best one and outperform, I would much rather just buy the ETFs, right? So like EWZ, TAN, IGV, a lot of these ETFs, where I'm liking what I'm seeing. I'm just going to casually just buy a little bit more, a little bits at a time. And when it comes to my position specifically in REPX, I am already up 34.5%, which is amazing because it's also a high dividend stock for me, at least when I bought it. I think it's like 4% right now, but I am very happy with the recent performance, and I'm not sure what I'm going to do with it. Maybe if it hits 100, I'll sell some covered calls, maybe just straight up sell stock. I don't know, because when it hits 100, anything can happen. It can come back down because it hits resistance, or it could just break that high. And if it breaks 100, well, that's probably a super cycle then. But of course, we have some other stocks that are doing very good, like Palantir up over 5% today. And speaking of Palantir, my t-shirt actually came in, and I'll show you guys just a second the packaging that it came in. The SoFi stock obviously doing very well today, along with the rest of fintech, 6.15%. Sprouts is up 3.29%, which is surprising because it's usually like a flight to safety. So, when like Pepsi or these other safer stocks go down, Sprouts would also typically go down, but it's having a good day today. American Express is also up 3%. I'm happy about that. I'm at 30 shares now. Lemonade was kind of surprising. It was down a lot, and I thought it would be up big, just along with the rest of fintech like Shopify, Hood, SoFi, but it's only down 1%, so it's not a big deal. But I just thought it was kind of interesting. If we take a look at my secondary account, Grievous, we've got Disney is doing all right today. The Nasdaq completely reversed its losses there, as you guys can see. It was down almost 2% and just completely reversed. Of course, I have a little bit of Robinhood in my secondary accounts. Got IGV still. Let's see, anything. Target, I guess, was cooling off a little bit today. Nubank was up 4%. Let's see, Reddit, of course, I'm at 0.72 shares of Reddit now, finally. I'm just, like I said, constantly trading in and out. Just whenever it's down big, I'll just buy one share, just kind of as a joke, but also not really, because I like what I see with Reddit, and then it'll just be up big the next day. So I'll just keep trading in and out of it, and I'm almost at one full share. So now it does seem like some other oil sector type stocks are actually down today, which is a little bit different from REPX. Maybe it's because no one was really trading REPX. It's a lesser known stock, but Hess Midstream is actually down 1.29%. NOG is down 4.29%. And then Chevron is down 3.38%. So we've got some other stocks that are not doing well today because of this news, but I personally might scoop up some more of these just during this time period of, I guess we'll just say, temporary peace for now. Hopefully it's permanent. Hopefully it is, but just in case, I think I'm going to scoop up a little bit more of these sectors. So some posts I wanted to go over on X. The first one is relating to Hood. It's actually from the OG himself, Jeremy. He is Holy Smokas on X, but he had this new video here talking about Hood, and I believe this is the first time he's ever had Hood on his top 10 watch list. I just realized I said list twice. But anyways, I responded here by saying people are always cautious with Hood, even when they admit it's possibly a buy, which is very different treatment from something compared to like a SoFi, right? Because if any of you guys are familiar with X or the finance community online in general, SoFi gets treated very differently from something like Robinhood, right? People view the SoFi investor base for some reason as more, I guess, sophisticated, more educated, as like a quote unquote safer stock. I don't really know why. If correct me if I'm wrong, but I don't even think SoFi is free cash flow positive yet. But I think most of it is stemming from the aftermath of the GME AMC craziness that was going on. So people were just branching out to literally any other brokerage that was available, and SoFi was the one that a lot of people started getting behind as like a Robinhood alternative, but also as like a stock investment alternative to Robinhood. But even to this day, when people put Hood on like their watch list or their top 10 whatever list, even the legend himself, the OG himself, Jeremy, he is very cautious when talking about Hood. And I personally like that, right? I don't want a SoFi type investor base backing Robinhood. I want a community base that is super cautious, right? Every time they talk about Hood, they're like, oh, maybe it'll go down more. I don't know. I want a lot of fear behind it, right? Because I think that was one of the many reasons of why the stock went up so much the previous hype cycle, right? When Robinhood literally went from, I want to say $7-8 a share all the way to 150, right? A lot of that momentum was because a lot of people were shorting it, a lot of people were betting against it, and too many people were cautious, right? Everybody was dumping the stock. There wasn't really a whole lot of there wasn't really a whole lot of sellers left versus something like SoFi where there's plenty of buyers. Lots of people are saying it's a buy. Lots of people are putting in their portfolios. So over time, you might run out of buyers, which reflects in the stock price because it doesn't perform as well as Hood. But when you go from literally not having any buyers into immediately everybody wants you, that's how you get something like Robinhood where it's $7 a share and then 150, right? So I personally like that about Robinhood. Now there was this other post I want to show you guys with my Palantir shirt and what that experience was like unboxing it. And I have to say, I'm pretty impressed. The packaging is very cool on the outside. It's very like eye-catching. It's very unique as well because most places when you just buy a t-shirt, they just put it in some clear plastic bag, ship it to you. But they actually put effort into designing the outside of the packaging, which is pretty cool. And then when you open it, it's not just a t-shirt. You get a bunch of stickers, you get some postcards, you get an authentication card because it's a limited edition t-shirt. And the t-shirt itself, I think, is made in the US, 100% cotton. So, it's a very high quality merch, even though it's $75. It's I think a lot of that money was put into the presentation and the quality of it. So it doesn't feel like you're buying, a $5 shirt at a 10x markup, right? It actually feels like you're buying a $75 shirt. So that's one of the things that impresses me about Palantir. It's their commitment to their brand and staying high quality. When it comes to some comments on my previous video, we got Tax the Poor roasting me a little bit, saying, "Can't believe how much money you have in Nike, worst stock on the market." And all this sentiment around Nike not doing anything, going down, it's the worst stock in the market. I completely understand that, but at the same time, that was also kind of the feeling that people had when Robinhood was at $8 a share, $7 a share, right? Nobody believed in it. Everybody said Robinhood's dead. And now they're saying Nike's dead. There's too much competition, right? Same thing that they said about Robinhood. There's too much competition, and the competition is better, right? You have SoFi, you have Webull, you have Fidelity, Schwab. Everybody's trying to eat Robinhood's lunch. That is what they say about every stock, right? But I think as long as you stick to very high quality, well-known names, I think over time you should be able to do good, right? And that's why I like to stick with a lot of stocks that are high quality in name. Like, I don't have a whole lot of Apple, but Apple is just one example. Disney is one example. American Express is another example, and Nike, of course. I think when there's literally no sellers left, every and anybody that even thought about selling Nike has dumped their final shares onto the market. That's when the flip happens, right? And it could be anything. It could be an improvement on their manufacturing, which translates into better margins. It could be a new, cool, hyped up product, right? Kind of like back in 2016, which is, I think, around where their high was, or maybe just before their high. We had those Virgil Abloh Off-White, hype beast sneakers. Everybody and their mom wanted it. Maybe it's another catalyst that's like that. I'm not sure what it's going to be, but when everybody that wants to sell Nike has completely dumped their shares, they're going to use any excuse to hype that stock back up, right? But we have Dylan saying bro is up huge today. I wish. I am green on paper, but still down almost 50% from all-time highs. We have Fizzy Rack saying, bro, stop withdrawing. I know it looks bad right now, but stay strong, boss man. Appreciate the kind words. But the withdrawals, it's just what it is. There were just some stuff that I had to pay off before my paycheck comes in, because usually it comes in on Friday. But there was some stuff I had to pay off on like Monday or Tuesday. So, that's the main reason why I withdraw, because I think it's better to do that than taking out debt or like credit card debt that's like 20% interest, you know what I mean? Because my margin is only like 4.5%. And if I only borrow for like a day, then it's not really 4%. It's just a very minuscule amount of interest. But I completely understand what you're saying. It's not good to withdraw from your brokerage account. I definitely don't recommend it, but I appreciate the kind words. But also, Fizzy Racks, if you super chatted, maybe I wouldn't have withdrawn money from a brokerage account. Maybe, I don't know.